Obviously, it's the same enemy. You know it, I know it. It's risk management. You have a couple good trades here and there, you're on a good run, and then you take one loser and blow out all the winners. You have 2 great weeks in a row trading, you're feeling confident, you're on top of the world, and then you lose 2 trades and you're right back below where you started. How do you prevent this? This is the reason most traders are not profitable. They haven't figured out the little techniques and tricks to always manage risk, even if everything goes wrong. Now, we're traders. Everything goes wrong very often. We don't play a fair game. But if you listen to this video and use this technique, I promise you'll learn how to survive these bad trades, bad days, bad luck. I don't believe in it, but a lot of traders do. And you'll extend your trading career. So we call it R value. R stands for risk, okay? This isn't algebra, but we're going to have to give some labels. R is risk. Every trade, you're going to have your R value, and that's how much you're going to risk on the trade, no matter what. Worst case scenario, that's how much you risk. Can you get out earlier? Of course. If you think you're going to lose, exit the trade. If you're uncomfortable, exit the trade. If your foot starts itching and you want to scratch it, exit the trade. It doesn't matter. But your max risk on one trade is 1R. So, now that you know what the R value is, you need to learn how to calculate your R. Because it's worthless if you don't know what it is. All you're going to do is take your average winner. Let's say you take, 50 trades. However long it takes you to take 50 winning trades. You're going to add up your 50 winners. Hopefully you guys can see this. 50 winners. And you're going to divide it by 50. That's it. Then you're going to average up your average winning trade. Let's say, you're a newer trader. You're not trading much size. Your average winning trade is $100. Cool. Nothing wrong with that, right? So now, you know your R is going to equal 100. So if your R equals 100, 3R is 3 risks. So 3 times 100, 3 times 100 equals, say it with me, 300. So boom, your worst day, everything went wrong, you're losing 3R or $300. So, this is where it gets more dynamic. Let's say you want to trade Nvidia. The stock is $500. You're a little nervous, you don't like it too much. You're going to trade 100 shares, right? You have 1 point of risk to equal your 1R. If it drops 1 point from your entry, you need to stop out. So what you can do to allow more risk is size down your trade. Instead of 100 shares, you can take 50 shares. So now, guess what? You can risk 2 points and only be the equivalent of 1R. No more fumbling around before the trade, figuring out how much size you need. No more getting nervous, watching your trade go up and down while you have a heart attack because your heart's beating out your chest. You know how much you need to risk before you even enter. And then once it does hit your risk, you just need the discipline to stop out. That's hard. I know it sucks when you lose sometimes, but you have to stop out. And the best thing about this strategy is we know our average winner already. So we know if we lose one trade, odds are we'll make it back on the very next trade. So there's no reason to revenge trade, no reason to be tilted. We know the math is in our favor. Now, does having an R value protect you from blowing out your account? Yes, it does. But let's say you're the worst trader ever, you're a beginner, you're scared, you get in and you sell your winners really, really quick because you can't believe you're winning. Guess what? Your R value is going to shrink. And as it shrinks, that means your risk is shrinking as well. So your equation will always be relevant to how you're trading. If you're having bigger swings, you're going to have a bigger R value. If you're having smaller swings, you'll have a smaller R value. This is the key to always managing risk no matter the situation. Volatility, no volatility, stuck in a range, or if the market's expanding. Your R value is going to adjust and you're going to still be able to be profitable and avoid blowing out your trading account. If you found value from this video, make sure to like, comment, and subscribe. Check us out on Instagram, TikTok. And if you want to come trade with us, hit the link in our bio, hit the link in the description of this video, join the server, come make money, trading stocks every single day with us.